The two largest categories of REITs and the two types of REITs that I'm going to highlight in this video are equity REITs and mortgage REITs. Equity REITs are REITs, which are real estate investment trusts, real estate companies that invest in income-producing real estate. Mortgage REITs are real estate investment trusts, real estate companies that don't invest in the physical properties, they're investing in the mortgages or the mortgage-backed securities that are going into those properties. So here you're getting exposure to the debt, here you're getting exposure to the actual property. Now I gotta give you the disclaimer before I give you some specific examples of this, which is, I'm just a random guy on YouTube. I'm not a financial advisor. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. And all the examples that I give you are just for example purposes. I'm not telling you what to invest in. Here are a few different types of equity REITs that you can consider starting your research on. Number one is Realty Income Corp, which has the ticker symbol O, and currently at the time we recorded this video, this has paying out a dividend yield of 5% a year. This is a REIT which invests in commercial properties around the world, income producing commercial properties. Then you have Crown Castle Inc., which has the ticker symbol CCI, currently paying out a yield of around 5.6% a year. This one invests in cell phone towers and other data infrastructure like fiber that can help supply technology, data, and other IT services around the United States. Then you have Invitation Homes with the ticker symbol INVH, currently paying out a yield of 3% a year. This is a REIT that invests in single-family homes for rental purposes, and then it also manages the leasing of those single-family homes, currently paying out a yield of around 3% a year. Again, all of these are equity REITs, meaning these are investing in the physical properties and looking to get the income out of those properties, the rental income out of those properties. This is where if you're thinking about investing in individual companies or individual REITs, you have to be able to analyze these companies. That means you have to be able to read a financial statement. You have to be able to listen to earnings calls. You have to be able to analyze these companies and value these companies to see if it's a good investment for you. Some of you are going to say, yes, I love that idea. That's what I want to do. No problem. Others of you are going to say, I don't want to do that. Is there a way for me to just get broad exposure to REITs? And this is where you can look for something like an ETF. An ETF is an exchange traded fund. It is a group of companies. And so now you can look for ETFs that give you exposure to equity REITs. An example is VNQ. This is an equity REIT ETF created by Vanguard, which invests in REITs that are investing in income-producing properties. That means if you invest in this ticker symbol, VNQ, you're going to be investing in a small piece of a number of different equity REITs. So if you invest in one fund like this, now you're owning a basket of equity REITs, and at the time of recording this video, it's paying out a 3.5% yield. Now, let's switch gears a little bit and talk about mortgage REITs, and you'll see why they're a little bit different. Now, of course, if you are an investor and you want to stay up to date on what's happening in the financial markets, this is where you want to join something like Market Briefs. Market Briefs is a free financial newsletter where every day my team is breaking down what's happening in things like stocks, the housing market, the economy, the crypto market, and the global economy into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning, and it's completely free. We have over 250,000 investors reading Market Briefs every day. So if you have not joined Market Briefs yet, I got the link for you to join down in the description below. Investing in mortgage REITs is generally more risky and more volatile than investing in equity REITs, and because of that, you'll generally see higher dividends on these types of mortgage REITs. Now, before you go out and make an investment decision based solely off of the dividend yield, you got to remember and understand that you're investing in the underlying asset, not just this dividend, because just because you get a high dividend doesn't make it a great investment if the value of investment is going down. And so this is where you want to make sure you do your own due diligence and understand higher risk, higher reward. You'll see much more volatility with mortgage REITs than you generally will with equity REITs. And so you got to find what's right for you. But a couple examples here are Annaly, NLY. The ticker symbol is NLY. Annaly Capital Management, which is currently paying out a yield of around 13%. And this is a company that invests in mortgage-backed securities. Now, mortgage-backed securities are a complex financial instrument. They are a financial derivative, which is one of the reasons why they can be very volatile and very risky. Another example is AGNC Investment Corp, which at the time of recording this video is also paying around a 13% yield. This is investing in mortgage securities, mortgage derivatives, different mortgages that are backed by single-family homes, but again, more risky, higher potential returns, but also higher risk. Now you might be wondering, well, Jaspreet, are there any funds for these types of mortgage REITs? Yes, there are a number of them out there. One example is REM. This is an ETF created by an institution called iShares. This invests in mortgage REITs. So if you invest in REM, you're getting exposure to mortgage REITs, a number of different mortgage REIT companies. At the time of recording this video, is paying out a 9% dividend yield. Again, you're lowering some of your risk by investing in a fund, but again, mortgage REITs are generally more risky than investing in equity REITs. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.